Good evening. Here are the day's detailed news summaries, presented in clear, listener friendly language. 1. Renewed U.S. Iran exchanges in the Strait of Hormuz. The U.S. and Iran clashed in the Strait of Hormuz, each side claiming the other struck first, reigniting Middle East tensions and further undermining fragile ceasefire arrangements. Oil prices jumped immediately. Brent futures rose about 2 to 3% to roughly $102 a barrel, while WTI climbed to the mid $90 per barrel, and energy executives warned of a deep supply squeeze, estimating cumulative shortages on the order of 1 billion barrels and saying normalization could take weeks to months. Markets have started trading a nacho scenario, not a chance Hormuz opens, reflecting bets on prolonged choke point disruption, lifting war risk insurance premiums, peaking at about 2.5% of hull value, and raising shipping, insurance, and risk premia. The result, a meaningful risk of sustained higher oil, increased inflation and interest rate pressure, and material burdens on global supply chains if the strait remains effectively closed. 2. Regulators probe suspicious trades ahead of Iran-related announcements. U.S. federal authorities are investigating a wave of large bearish oil bets executed minutes to hours before public announcements about potential conflict with Iran, raising insider trading and market manipulation concerns. Data obtained by ABC from the London Stock Exchange Group show trades of roughly $500 on March 20th, $906 on April 7th, $706 on April 17th, and $430 on April 21st, more than $2.6 billion in total, clustered immediately before major statements. The DOJ and CFTC are scrutinizing futures and prediction market activity to determine whether political connections or leaked confidential information produced unlawful profits, while noting trade data alone do not yet identify individuals or prove criminality. The episode underscores renewed worries about market integrity as geopolitical volatility drives sharp energy price moves. 3. U.S. labor market shows modest strength with 115,000 jobs added in April. Non-farm payrolls rose by 115,000 in April, and the unemployment rate held steady at 4.3%. Signaling only modest labor market momentum. Job gains were concentrated in health and social assistance, transportation and warehousing, around 30,000, and retail, about 22,000, while information, finance, government, and manufacturing posted losses. Recent revisions cut February-March payrolls by 16,000, leaving a 3-month average net gain of about 48,000 and a year-to-date monthly average near 76,000. Labor force participation ticked down to roughly 61.8%. Involuntary part-time employment rose by about 445,000, near 4.9 million total, and wages rose 0.2% month over month and roughly 3.6% year over year. Economists warn that rising energy costs from the Iran conflict could damp consumer spending and corporate hiring, keeping growth fragile and making the Fed more likely to remain on hold rather than cut rates soon. 4. Federal panel blocks former President Trump's 10% across-the-board tariff. A 3-judge panel of the U.S. Court of International Trade ruled 2-1 that the Trump-era 10% tariff on all imports was unlawful, finding the administration did not meet statutory conditions under Section 122 of the Trade Act. The court ordered the collection of those tariffs to cease for the named plaintiffs, including the state of Washington, and retailers such as Burlap and Barrel and Basic Fun, and instructed refunds for duties already paid, though the decision applies directly to the plaintiffs. The tariff had been adopted after the Supreme Court curtailed previous broad presidential tariff authority under IEEPA, and the administration plans to appeal to the Federal Circuit and possibly the Supreme Court. The ruling reaffirms judicial limits on unilateral trade action, creates refund and uncertainty issues for importers, and signals further legal battles ahead over alternative trade measures and industry-specific remedies. 5. Shivon Zilis emerges as a key witness in